How does price behave when it gets to the numbers? That's what you want to ask yourself. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. It's Monday, a start of another week. We had some big moves last week, definitely in the British pound crosses. We had some very textbook trade setups, a lot of questions over the weekend. We talked about timings, the importance of timings, understanding the timings, those 3-hour windows, the type of scenarios that can evolve over the course of the 24-hour cycle. We talked about the weekly cycle, the weekly template, working down low for a reversal, working in a range for a breakout pullback continuation, or working 3 days in one direction or 3 pushes in one direction for a sell-off and then a continuation. We saw different types of those scenarios play out, but essentially we addressed the importance of understanding the high and the low of the week. Today we're going to talk about how price behaves at the numbers. So we want to couple the weekly template, the Monday, Tuesday opening range, but we want to also understand as the day itself evolves through those timings, the importance of the numbers and the 50 pip boxes, trapped volume down in a quarter level or up in a quarter level, or when the day is setting up and starting to set a high and a low, how to identify median price, and that can help us form a thesis where our 50 pip box may be. And again, targeting the simplest or the easiest setups. And what I mean by that is usually looking at the ones that have given us a buy low setup at the low of a week or a day, or a sell high setup, or a breakout pullback continuation. We talked about the 3 things that markets do. They break out, they pull back, and they trend. They break out, they pull back, and they reverse. And they break out, they pull back, and they go into a trading range. Those are the only 3 things that markets do. When we understand that and we watch the day evolve, setting a high and a low, if we can identify median price either being a quarter level or a round number level, as the structure has set up, we can form a thesis on the day for either a trend trade or a reversal type scenario. And it's important to understand that if you're inside of the highs and lows, that essentially you're in the middle and the stops are above and below, and at some point in that week, in those timings, in those timing windows, they will go outside of that range to hit the stops, or if it's a trend trade, to squeeze and continue that move. So I've talked about the importance of trying to get filled for myself at or near the numbers. But that's not just randomly picking a level when price gets there and getting in at the numbers. It's all about how price behaves at certain times of the day, whether we're at the high or near the low, or if we're inside of a quarter level. Based on that behavior at those timings, I want to either be getting in at the numbers if the market allows me to do that, or if they've locked in a high or a low and they're going to be reversing or continuing with the trend, that I get the best fill possible once they've confirmed that thesis for that trade entry. So we talked about weekly structure. So Monday, Tuesday, if we're starting off, today's Monday, so what I do is I already looked at my pairs and I'm marking off as the day it starts off. If we're starting off in Asia, in here, my major round numbers at that point are 00 and 50. My median price, therefore, would be 75. Now, as Asia trades, and I'm coming towards the end of that Asian window, if we're still inside of that 50 pip box, well, then I'm going to be looking for something up at the zeros or 50 as a buy low or a sell high setup. If the market was to break down through a level, then of course I'd be potentially looking for a continuation, breakout, pullback, continuation, depending on how price behaves. If it kept extending down, well, obviously I may be looking for a buy low scenario in the lower part of the 50 pip box. Or are they trapping volume down underneath for a move back up above the 50, trapping volume down in that lower quarter for a 50 pip move back up towards the double zeros. So there's lots of different scenarios, but if we're trading sideways, we may see a break high, a break low, and eventually a sell high setup heading down towards the low of the day around median price. So we either want to be selling high or buying low, or if median price eventually gives us a sell high off the numbers, again based on the timings and how price behaves. We know that if we're going to be selling high, we want to see something that's confirming that with either an engulfment where they've locked in the high, usually at the numbers, and then a pin hammer, which confirms that second stop hunt into traders who get it right as the first mouse for the move back down, or vice versa for the move back up. So we want to know, what time is it? Where are the major round numbers? Again, as Asia's trading, you should already be able to go and mark off wherever Asia's set up, if we're inside of zeros and 50s, or if we're inside of a quarter level and median price is in fact a major round number. If we're inside of 0 and 50 or 50 and 0, most likely then we'll have a median price that's a quarter level, or we'll be trading inside of a 25 pip box on top of major round numbers, or on top of a quarter level underneath of major round numbers. Then you want to ask yourself, is this a day where there's trap volume, or are we in a trending market? So if the market is broken out and pulled back and we're continuing, well, obviously we're in a trending market. But if the market is working in a high-low scenario, we may in fact be trapping volume inside of a quarter level range. Now if we're in median price and the market's auctioning around it, of course, therefore we're in a 50 pip box. So we want to identify there where the median price is. As the day unfolds, are we extending, as we talked about, 3 levels of 25 pips or more? Because we're in a sell high scenario, it's a Monday, we may get a peak formation in place, and in fact we may already be underneath of some peak formations on some of the pairs, the euro, yen, for a possible Friday, Monday, Tuesday scenario in that larger rectangle where we build our weekly structure. So each day, as the day unfolds, have we already met or exceeded the average daily range? And in fact, therefore, we can start to look at that thesis. If the market's been trading and it's gone up 25 and we're heading into New York and they're still making new highs, chances are we're going to get a sell high scenario in that upper quarter level. If it was a trend trade, we might work back down into the quarter for the move back towards the high of the day, because again, the high and the low are where the money is. The stop loss orders, breakout orders, take profit orders, and if we've hit a previous day's high or low, then of course we're looking at other time frame traders now being in the market, and that can fuel a larger move, whether it's a reversal or a trend trade. And then lastly, understanding 25 and 50 pip movements outside of the Asian range. So if we have median price, obviously that median price level can act as a potential area for buying and selling if the market at the timings gives us. We could be in a squeeze with 3 pushes into a low and come off that median price for an explosive move, or in the opposite direction. But the other scenario is that if we're working off the high and the low around median price, 25 to 50 pips outside of that Asian range can be where that move exhausts itself as we head into the next 12 candle window for either a reversal, or if it's working back into the trend for a continuation move. But that 25 and 50 pip increments outside of the Asian range can start to allow us to establish a thesis for strike zones. If the market is only working that 25 pips higher, or if it breaks out, pulls back, and continues a second 25 for a 50 pip move, we can then look for a 25 to 50 pip reversal trade setup if price behaves when it gets to those levels in this way. So we'll look at some examples, but again, we talked about timings, the importance of understanding the timing cycle throughout the 24 hours. We talked about the weekly cycle. We talked about the importance of round numbers, but how does price behave when it gets to those 25 and 50 pip increments outside of our 50 pip box? So we should be able to identify the 50 pip box as the day sets up and starts trading, and we're either going to be trading around a number or inside of a quarter level, on top of or below a 50 pip box. And if we're inside, the quarter level itself can be acting as the median price level for a sell high or a buy low scenario. So let's take a look at some examples from last week. Again, thanks for a ton of comments. I've got a massive amount of emails to get through. I appreciate your patience. And again, keep the questions coming. Keep it simple. Structure, big picture, high of day, low of day. The timings are critical. Is the importance of round numbers and how price behaves when it gets there. Engulfments, pin hammers, a 1 ATR stop, 2, 3, 4, 5 times profit targets for your risk, depending on where we're at over the course of the week as it evolves. Some of those measured moves will be targeting 150 pips, depending on how these pairs set up. And then, of course, managing yourself, being patient, but understanding that when I'm trading these, I'm trying to fight for the best price as close to those number levels as possible. If you're getting filled somewhere in the middle, chances are you could be caught in a trap. So you want to be making sure that the move has already been locked in for the peak formation, and do not counter-trend the peak formations. Keep it simple, traders. Start the week on a strong note. There's going to be 50 pips again today. There'll probably be 50 pips every day this week. Keep it simple. Focus on your best trading setups. Stay focused, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading. Continuing our discussion on how price behaves when it gets to the numbers. We talked about the importance of the timing cycles over the 24-hour day. We talked about the weekly templates as Monday, Tuesday begin to trade. They set a high and a low for the week, and that can potentially establish the boundaries for either a breakout, pullback continuation for trend trade, or a working the high for a reversal setup, working the low for a reversal setup, or just a trading range over the course of the week. Just looking at a couple of different pairs and looking at how the week's traded. As Monday started, we're looking at the pound Canadian. As Monday started, we were inside of 50 and 00, and therefore our median price would be the quarter level, so the middle of the 50 pip box. We had the previous Friday's low marked by the blue line, and of course the high of the US 3-hour window was broken heading into the close of the Friday session, and then the next swing high was the swing high from the London session in our 3-hour window. And so as our day evolved, the Asian range traded above the quarter level and then back down below before giving us a 1, 2, 3, 4 stop hunt to the high of the day. We spoke about this last week. We spoke about traders shorting this engulfment at the high of the day inside of the 25 pip box, and understanding why, if you're shorting this here, how you're shorting it into the bottom of the 25 pip box, meaning that obviously there's potential support coming in at the numbers at that level. And if you didn't recognize that after 45 more minutes, the market's still sitting in the entry price, you have to be suspicious that you're in a move where they will come up a second time towards the high. So again, I talked about the importance of getting filled at or near the numbers, and this is inside of a 25 pip box. But our median price in that 50 pip box was the quarter level. We have a low of the day set up. We have a high of the day set up. They hit it, they pull it back into the numbers. They hit it one more time with a 1, 2, 3 sideways pin hammer at the top of that 50 pip box for a move down through the low of the day, through the low of that 50 pip box into the next quarter level. and then hitting the low of the day before reversing, coming up to the numbers again, and then stop hunting the upper 25 pip box into the previous day. As we head into the next day, on Tuesday, again, we have our highs and lows. Understanding that these highs and lows, you're inside of a previous session's high and low. The market is inside of a 50 pip box where the round numbers are now our median price, and as we talked about, we can expect potentially a move off of the round numbers, which is why we will not necessarily see these go back to the extremes when they're trading around the round numbers. We see a breakout, pullback, working the low of that 25 pip box, and a continuation down into that lower 25 pip box to round numbers, to double zeros, for a stop hunt back up 50 pips, 1 push, 2 push, 3 pushes, back up to the 50 level. So again, we're in a 50 pip box. The market initially started its Asian range, but it came below the numbers, worked up into them, and then sold off of the round numbers, worked its way down to the bottom of that 50 pip box before stop hunting back up with 3 pushes to the numbers, and then an engulfment to continue that move down to the lower part, the lower 50 pip box. It's important about understanding the behavior of price when it gets to these number levels and the timings. This is in the gap time. The market came back 25 pips prior to the US 12 candle window, came down 1, 2, 3, engulfment back up into the upper 25 pip box. The first thing you should be thinking is something is potentially setting up for 50. First hour, the equities hour, drags lower but reverses again, 1, 2, 3 to the numbers. We have 3 pins at the high. Those are 3 pins up top at the numbers. You have to be thinking either looking for the sell setup at the numbers. We get the engulfment back down, but that's the third push. This market will not come back on a third push. This market will move quickly for 2 reasons. Number 1, to trap traders. We have trap volume above this level. Number 2, that scares traders out of taking the move when we see a large momentum candle that comes off a high or a low, scares traders from taking that trade. They think their stop is too big. And as I've mentioned, if you're filled at or near the numbers, you're still looking at a 20-25 pip stop, 1 ATR stop as a maximum, because if this market is below the quarter level or locking in a high or a low, it should not be going back more than 20 to 25 pips. And very rarely when it's the third leg will it ever do that, because they have volume trapped and they will move it away quickly so as to not allow traders that are in losing positions to get out at break even or with a smaller loss. They have that money now trapped. They shift it away. So we have our Monday, Tuesday, Wednesday. So we've broken out of Monday's low and Friday's low. And again, gone into consolidation off the round numbers. Pulled it back. We have a 50 pip box where the quarter level now is a median price of that 50 pip box. We have a high of the day and we have a low of the day. The market is in a breakout in the downward direction. We've had a 25, not quite 50 pip pullback off the low and gone sideways. The market goes into our Europe-London 12 candle window, engulfs at the high of the day at the numbers in the middle, but it's filling at the numbers, pulls back a second time for our M structure, our larger M structure in an existing downward move, and we get our pin hammer if traders hadn't already entered in at or near the right shoulder at the numbers. We have a pin hammer confirming the breakout for the continuation of measured move from high to low, targeting minimum of 2 times that expansion of that range. The market then again heads down to the lower 50 pip box and goes into consolidation. As we head into Asia, We have our 25 pip box above the median price. The market works its way down and stays above that price for giving us an engulfment towards the end of the Asian 12 candle window. The Asian 3-hour gap time window. So we set our 3-hour high and low. They break above it in the end of the Asian hour, first hour of the Europe London 12 candle window. So now we're looking breakout, pullback, continuation. Market goes higher again before pulling back, and then 1, 2, 3 to the high. So again, I talked about 3 and 6 hour time frames, and the market only moving 25 pips in that whole entire now 8 to 9 hour window. When the market has only moved 25 pips outside of that Asian range after that extended amount of time and has given us a pin hammer at the high in the gap time, we can now treat this as a potential high of the day scenario. And the market came back in the US session 12 candle window in the equities hour, taking traders higher up into the high of the day in a downward template week. So again, we're gone 75 pips from the low after 12 hours of trading. The market then engulfs and gives a pin hammer below the double zeros. This is a stop hunt on traders who have shorted the original engulfment before dropping down 50 pips to the low of the week. So again, now we're on day 4. We're at the low of the week. We've had a 50 pip move. The market's pulled back 25 pips in the rollover time and then pulled up inside of our 50 pip box, where again we have median price as the quarter level. And the market drops below the quarter, working the low of the day towards the end of the Asian session before pulling back and hitting it a third time for a middle structure. And then a first clue is our pin hammer prior to the Europe London window. We get a breakout after a second smaller pin, an engulfment, and then another engulfment above the quarter level that is pinned up towards the high of the day and the middle structure from the rollover time. But more importantly, we have now peak formation stop hunts into the peak formation lows and our W structure for a move above the numbers for a continuation potentially back towards at least the high of Thursday. Again, this area represents where stop loss orders are, breakout orders, take profit orders. And once it's inside of this, we have a pin hammer that crosses the double zeros towards the end of the 12 candle window. You have to be thinking traders are already short this market. They have stops above that pin. This is an obvious area that the market will go after once it closes back inside of that pin hammer above the numbers. Stop hunting up, coming back down, and before hitting it again and hitting stops, clearing out the high of the day, and continuing that move for 50 pips into the US session. So again, 50 pip boxes, median price, the timings, the importance of how price behaves at the timings, high and low of the day, inside of those 50 pip boxes, understanding where stop loss orders are, trapping volume, either down low for a move back in the opposite direction or trapping volume up high in a 25 pip box before shifting away for 25 to 50 pips. And again, every day, using the numbers and understanding the timings, trapping volume, the behavior of price at those levels, and understanding where the other time frame traders are positioned for either hitting stops, breakout orders, taking profit, or breakout pullback continuations. Keep it simple, traders. As we head into today's session, again, we're in a 50 pip box between 50 and double zero. Market is currently trading beneath the quarter level. So how this market behaves as we head into our gap 3-hour session coming very quickly in the next 15 minutes. The market may protect this 50 level for a move back towards the high of the week, or it may test this upper quarter level, trapping volume above this level. We could see a double stop hunt down, a stop hunt high, and a sell-off off the quarter, or a breakout pullback continuation. Currently, though, the volume is getting trapped in that upper quarter. We do have possibly room for this market to retest trades from Friday's session. It's all about how price behaves at the timings, at the numbers, currently inside the numbers. Time will tell. Keep it simple, stay focused, stick to the numbers, and may the markets go.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.